Welcome to this explainer. Look, right now in August 2026, the Indian stock market is going through a genuinely historic shift. We are witnessing one of the biggest months on record for new share sales. But the forces actually driving this, they're absolutely not who you might think. Whether you're a seasoned trader watching the daily indices or a complete beginner just trying to figure out how wealth is actually built in India today, this fundamental shift changes literally everything. We're going to break down exactly what's happening under the surface, where all this money is flowing, and most importantly, why understanding this is absolutely crucial for your own financial journey. It's a story of changing tides, and honestly, the reality of who holds the economic power is flipping right before our eyes. Okay, let's dive into this. $10 billion. That is the staggering amount of new share sales that hit the Indian market just this August. This incredible influx of capital officially made it the biggest month on record for new share sales in the country's entire history. When we talk about a market boom, we're talking about massive scale here. Companies are raising capital at a truly unprecedented rate. To put that into perspective, for an emerging market to absorb a $10 billion capital call in a single month, that requires immense liquidity. It means there is an absolute ocean of cash waiting on the sidelines, just eager to be deployed. But to really wrap our heads around a number this massive, we have to look closely under the hood. Let's break down this Goliath of a number and see exactly where this massive cash grab is happening. A huge chunk of this $10 billion comes from just a couple of monumental events. $3 billion of it comes directly from the government's own life insurance corporation, or LIC, stake sale. That's a massive move that naturally commands a ton of market attention. Then another entire $1 billion was added by a major hospital chain's IPO, completely capturing that post-pandemic surge in healthcare valuations. And the remaining $6 billion? Well, that's made up of various other share sales across the board. The sheer volume of companies rushing to raise money right now is historic. It points to this overarching corporate confidence that, hey, if they ask for capital right now, the market is absolutely going to provide it. But here's where things get really fascinating, and honestly, kind of weird if you casually follow financial news. On one side of the equation, we have these record-breaking new share sales, with companies successfully raising billions. But on the other side, India's actual stock indices haven't really moved much at all this year. They're mostly flat. Typically, a massive frenzy of new capital aligns with a roaring euphoric bull market where indices are hitting new highs every single week. But that is not what's happening here. Instead, it's a market where companies are aggressively, almost quietly, raising money because they know there's plenty of cash just sitting around waiting to be invested, regardless of whether the broader indices are flashing green.
So what does this all mean? Where is all this cash actually coming from? If the stock market indices themselves aren't skyrocketing and creating this natural wealth effect, who exactly is enthusiastically funding a $10 billion boom? Historically, if you looked at a developing market absorbing this kind of liquidity, you'd automatically assume it's the giant global players. You'd think of the massive overseas funds, the foreign institutional investors, the global hedge funds with the power to move entire markets with a single algorithmic trade. You'd assume that the big money is calling the shots.
Section 1, the great plot twist. Because as it turns out, it's not the big foreign funds driving this cash influx at all. The money funding this record-breaking month is coming increasingly from us, regular, everyday people and domestic mutual funds, you and me. The retail investor has fundamentally taken the wheel here, replacing overseas funds as the absolute driving force of this specific boom. It's a total structural shift in how the Indian economy actually funds itself. To understand how ordinary people are pulling this off, we have to look at the specific tool they're using, a SIP, or Systematic Investment Plan. It's a strategy where ordinary individuals invest a fixed amount of money regularly, rain or shine. It doesn't matter if the market is up 5% or down 10% that week, the money just gets invested automatically. It's a wonderfully simple concept, but it's exactly what empowers the everyday David to go toe-to-toe with the institutional Goliaths. By automating the process, everyday investors remove all the emotion from trading. They aren't trying to outsmart supercomputers or time the market perfectly. They're simply accumulating assets continuously. And that neutralizes the massive advantage that institutional money usually holds. Now, what's really interesting about this is that monthly SIP investments in India have been holding above 30,000 crore rupees, which is roughly 3.6 billion US dollars, every single month. Just let that scale sink in for a second. This isn't some one-time surge, a meme stock craze, or just a lucky day in the market. No, this is a staggering, relentless amount of money that everyday retail investors are steadily pouring into the domestic market, month after month, without fail. In the past, market liquidity was like a faucet controlled by foreign sentiment, easily turned off when global conditions got tough. But now, this $3.6 billion is basically an internal domestic engine that keeps churning out liquidity, completely independent of what Wall Street or global hedge funds are up to. And that massive sum is being driven by over 10 crore or 10 million active SIP accounts. This is the real secret behind that $10 billion ocean we talked about earlier. It's not a handful of billionaires writing massive checks in some boardroom. It's 100 million small, steady drops from ordinary citizens creating an unstoppable force of domestic capital. What we are witnessing is a profound cultural shift. For generations, the default for Indian savings was traditional bank deposits or physical gold. Now we're seeing a massive migration of that middle-class wealth directly into the equity markets. 100 million accounts consistently adding to the pool fundamentally changes the entire DNA of the Indian financial system. Section 2, the stress test. Because let's be real, it's easy to invest when things are calm and the arrows are pointing up, right? But to truly understand the power of this retail movement, we need to look at what happened earlier in the year when the Indian markets dropped sharply, volatility spiked, and the headlines were genuinely terrifying. And this brilliantly illustrates the dynamic. When the market dropped, foreign investors completely panicked. They pulled out a record amount of money in a single month, running for the exits just as you'd historically expect. But the retail SIP money, it didn't run. In fact, retail SIPs actually hit an all-time high during that exact same month. The contrast is absolutely stunning. You have the panic and immediate capital flight of sophisticated foreign funds running away from risk, contrasted directly with the steadfast, unwavering discipline of everyday investors who just kept buying. They didn't blink. They trusted their automated systems and actually provided the exact liquidity needed to absorb the massive foreign sell-off, essentially preventing a total market collapse. Millions are quietly building wealth through consistency, not stock picking. This dynamic is the absolute core of what's happening in the Indian market today. The real story isn't about having inside access to the hottest new IPO, and it's certainly not about being a genius of picking the next big multi-bagger stock. It is about millions of people quietly building long-term wealth through pure consistency, even when the financial media is screaming that the sky is falling. This behavior doesn't just build individual wealth, it fundamentally stabilizes the overall Indian economy. By providing a permanent, predictable floor of domestic capital, these everyday investors have essentially insulated their own market from the wild, unpredictable swings of global financial panic. Section 3, the beginner's blueprint. So we've looked at the macro numbers, the billions of dollars, and these historic market shifts. But let's transition from the macro economy directly back to your own wallet. How do you actually participate in this massive wealth generation without needing millions of dollars to start?
The answer is incredibly straightforward. Step 1, start a simple SIP today. Step 2, leave it alone through all the ups and downs. You literally don't need to overcomplicate it with complex derivatives or daily chart reading. By simply setting up an automated investment and refusing to touch it when the market gets scary, you are mimicking the exact same behavior that is currently reshaping the entire stock market. Now, step 2 is notoriously the hardest part. Human psychology always wants to intervene, to sell when it drops and buy when it peaks. But true wealth in this system is generated by the stubborn refusal to act, the discipline to do absolutely nothing when everyone else is panicking. That is your greatest asset.
The trend isn't the IPO boom. The trend is discipline. That is the fundamental takeaway here. The massive share sales, the $10 billion raised in a flat market, those are really just the symptoms. The root cause, the actual tectonic plate shifting beneath the surface, is the quiet, relentless discipline of the everyday Indian investor. They've stopped trying to time the market and have simply become the market. And honestly, the best part about this structural shift is that it is completely open access. Anyone watching this explainer can join that disciplined movement right now, today, with whatever amount they can afford to set aside consistently. So, the real question is, are you ready to start? The Indian market is no longer waiting on foreign giants or Wall Street algorithms to dictate its future. It is actively being funded by its own citizens. Will you be one of them? Are you already building wealth through SIPs, or is this explainer the exact push you needed to take that first step? Let me know in the comments below. I'll definitely be reading and replying. And if you want to keep understanding what's actually happening in money and markets in plain, simple language, make sure to subscribe. See you in the next explainer.